I was able to sit down with Salesforce.com CEO Mark Benioff ahead of this week's Dreamforce conference here in San Francisco, where they're expecting 40,000 people to attend. His main message this year, that companies aren't being social enough and that they need to transform themselves into what he calls a social enterprise.
Well, you know, there's a social revolution that's happening in the world. It's amazing. I mean, you know, we can see it in the news every day. You hear about Arab Spring. Countries are falling, dictators are falling, but it's not just about countries and dictators. Companies are falling too. And you kind of have to ask which CEO is going to be the next Mubarak, because this technology is really fundamentally changing how we run our companies. You know, how do we think about our organizations, our employees? How do they collaborate and share inside their enterprises? That's number one. Number two is, what about our customers? How do we bring them in using this new technology? And three, and I think most importantly, new ways to build products that we can connect those right onto social networks as well.
Mubarak, that's a pretty extreme analogy. How badly would you say some companies are lagging behind their customers in the use of the consumer internet?
Well, I think the problem is there's a kind of a divide, a social divide. You know, we used to have a digital divide, but I think it's a social divide between your employees are social, your customers are social, maybe the users of your products are social, but is your company social? Are you running your company using the technology that's so popular today? The social technology, the mobile technology, cloud computing technology. Those three legs of the stool are kind of what's propelling growth in our industry right now. And if you're not social, mobile, and cloud, what are you? And I think that's what HP just went through. They just kind of went through HP Spring.
Can any company really know everything that their customers are saying about them on Facebook or Twitter?
Yes, you have to be paying attention to the issues, and you know, certainly product issues are easier than ever before to kind of stay in touch with. That's certainly very important, but it's much more than that. It's really developing that level of customer intimacy. And as the technology has changed, the customers are kind of over here, you know, and the question is, are you with your customer or are you over here? And just being, you know, ready to receive a phone call on your 800 number or ready to receive your email is not enough anymore. You have to become a social enterprise. That's the cure to the problem.
Does everything that we tweet or post about become fodder for companies to consume, measure, or market to?
If you're putting something out in the public domain, I think it's absolutely right for that vendor to monitor it and to measure it and to make sense of it and try to bring that into their company and make their product better, make their technology better. That makes a lot of sense to me.
You just signed a big deal with Groupon, right? You're providing software for their salespeople. Are pre-IPO companies a new target market for you?
Well, that's a great example where Groupon really is, you know, one of the fastest growing companies in the world ever. I mean, I think they had something like 22,000% increase in growth last year. I mean, I don't know what company or what CEO wouldn't want that. And when you talk to them, how did they achieve it? They've hired thousands and thousands of salespeople that are using our technology to really help them to collaborate and focus on specific markets.
How were you personally involved in nailing down the Groupon deal? Did you court Andrew Mason to make that happen?
Well, that's actually a deal that I was very deeply involved in. I met Andrew for the first time at the World Economic Forum in Davos in January, and then I went out to Chicago a couple of times, and we really looked at putting together a complete architecture for Groupon that showed them how to do everything from securing a new customer relationship to writing their Groupon, to measuring the result, to managing their redemptions, all using this next generation social enterprise technology. We called our project Groupon Forever.
Okay, let's talk a little bit about earnings. You had a great quarter, revenue up 38%. You've got 6,000 employees. You say you're going to keep hiring, giving bigger bonuses and commissions. How sustainable is that kind of growth?
Well, we have had just a spectacular year. We had a really strong first quarter, and we've also had a really strong second quarter. And you saw that we also raised our guidance as well, because we delivered a 38% growth rate in our second quarter, but 37% in our deferred revenue, which really is the indication to us of what's coming in the future.
And analysts Analysts seem to be vastly optimistic about Salesforce's growth, though. There's always those people in the bunch who are skeptical. Want to read you a quote from Barron's saying, "While Salesforce's earnings report is impressive, we think significant risks remain and would hold off on buying up shares." And the risks they cited were billings growth, market turmoil, and investors moving away from volatile stocks. How do you respond to that?
We are the fastest growing enterprise software company of our size in the world today. And in terms of market volatility and in the stock market and all that, what I've learned as CEO is I let the stock market take care of itself. I just make sure my customers are happy.
The price-to-earnings ratio is, last time I checked, 792 times last year's earnings, which, to be fair, is far above average for tech companies. With a number like that, what's the upside for investors?
Well, you know, I'm not a financial advisor and I'm not a stock market expert. I'm really just a software expert. So my job is to grow the company's top line. And the way I look at this is I'm all about growth, growth, growth. My job is to grow the company to achieve market share and to beat our competitors. We are in a huge market and we're going to spend to grow. So I think the right way to look at our company is the level of top line growth. That's what we're focused on. We're not about maximizing our GAAP profitability. We've said that very consistently over the last decade, that we really want to focus on gaining market share. Because of the deferred model, we have to spend really to achieve that future revenue growth.